anxiety around me. So I figured better to get started a little bit early. Hey YouTube, it's about 2:57 my time Central, and I'll be getting started in about 3 minutes. I've also got myself live on Facebook up there as well. Today we're talking about mortgage rates and refinancing and everything you need to know. So we've got about 3 minutes before we officially get started. I wanted to clock on a little bit early because, again, I have anxiety around technology and it has anxiety around me. So I wanted to be a little better safe than sorry. Hey, Lindsay. Hey, Sheila. I would wave at y'all with the little button, but I've got the phone too far away to be able to press it. But thank you guys for tuning in. I appreciate it so much. Okay. Hope everybody's having a great Friday. I know that lots of people are having a great Friday because the river is insanely busy. I'm being distracted by boats and jet skis flying by and loud music. So once I get done today, maybe I can go join them. Pretty exciting. So we're about 2 minutes down now, 2 minutes left to officially being live on YouTube, talking about refinances and mortgages and rates. Hey, Jeremy, how you doing? Thank you so much for jumping on. Good to see you. Hey, Sai. Happy Friday. Yes. Hey, Riley. Thank you so much. You're so sweet. I hope y'all are doing amazing. Got 2 minutes left. Trying to be proactive so I don't have technical difficulties. It's actually pretty funny because I've probably been shown about 5 different times how to go live on YouTube on my channel. And I still have to play with it for a little while and try to find that button again. It's so elusive to me. So I'm pretty excited that I actually got it today and on time. Very exciting. So maybe next time I can find it without a 5-minute trial period. All right, we are down to 1 minute left before we're officially going live to talk about everything. I have an exciting announcement today as well. So I hope that you guys get a lot of really good information out of this. My goal, as always, is to spread mortgage peace. So we're less than 1 minute. Okay, let's see. Okay. My phone rings, so hopefully I'm still live on Facebook. I don't know if it stops it, but I think I'm still live. Who knows? One day I'm going to get good at technology. Hey, Steph. Thank you so much for joining me. Okay, we're almost there. It's almost 3 o'clock. Getting so close. So close, so close. Yes, happy Friday. Okay, it's 3 o'clock. So excited and nervous, but it's all good. So today, my YouTube live, and I've got Facebook going above me as well. Why not do 2 for 1, right? So today's YouTube live is mortgage rates and refinancing and everything that you need to know. So thank you so much for tuning in. Have you heard people talking about refinancing? Hey, Lauren, have you heard about people talking about refinancing? Have you heard about low rates? Have you heard about the rates are historically low? Have you heard the Fed's rate lower the funds rate to 0%? Have you heard all these things? Because I know it's all coming at us from a million different directions, right? And what does it all mean? So if you've got 45 minutes or less for me today, I am going to give you all of the scoop. So make sure you stay tuned in for the 45 minutes or less, which is my goal. On this Friday afternoon, it's less than a lunch hour for you. So for those of you who don't know, my name is Stephanie Weeks, and I've actually helped thousands of people with millions and millions of dollars in mortgage financing. I've been a mortgage loan officer for 16 years. How did that even happen? I'm not even sure. And for the last several years, I've been recognized in the top 1% in the nation for loan officers as far as loan production, which is really exciting because there are over 300,000 loan officers. So that's pretty cool. I'm also the author of the book Mortgage Peace, which is an international bestseller. So I have a little bit of information, a little bit of knowledge, and a little bit of experience when it comes to anything and everything mortgage. So thank you for tuning in and trusting me and providing you good, detailed, accurate information. So I want to make a super, super quick announcement, then I'm going to jump into the subject, but I'm really excited because long time coming, but I am officially going to be launching my course. My course is called Mortgage Peace. It's going to be an online course. I'm finalizing the date and the details, so stay tuned for that because I will be dropping all that information. It's really exciting because it's really been a long time coming. Mortgages are such a huge part of so many lives, ours and so many people that we know, right? And so many people experience getting mortgages and so many people unfortunately don't. Did you know that about 21 million people a year, that's a year, that's not over 5 years, 21 million people a year apply for mortgages, and on average about 7 million close. And I think that that is horrible, first of all, but I think the problem really is mass confusion, lack of accurate information, overwhelm, lack of knowledge. And I really, truly believe in my heart that more people can be approved for mortgages. So that's why I wrote the book, and that's why I'm launching the course, which is that next step. The first round of the course is going to be at a really great discounted rate. And who is this for? So the course is going to be for anybody who has thought about buying, selling, investing in real estate. It might be someone who's a first-time home buyer that wants to buy in a year, that wants to buy in a month, that wants to buy in 2 years. It's for them. It's for you. It's for someone who wants to invest and become a real estate investor. It's for someone who's bought a home and maybe didn't know what happened or really understand all the details and they want to. Maybe it's for someone who bought a home and they want to buy another one and get a better deal. Maybe it's for somebody who owns a home and wants to refinance and just really make sure that they do what's best for them and their family. This course is for all of those people, anyone who it may be able to help. And I believe that's a lot of people. So because I'm excited about that, I am actually going to be giving away, hey, Amelia, hey, Christine, I'm actually going to be giving away a free copy of my ebook, Mortgage Peace. So the link to that will be in the comments in my YouTube, because I've got Facebook here and YouTube here. But the link to that will be in the comments if you want a free copy of the ebook, as exciting or excitement or whatever word you want to use for the course coming out soon. So stay tuned for that. So I'm going to go ahead now and dive into what you're all here for, and that's refinancing and rates and just trying to kind of narrow down the sea of overwhelm that's out there. So thank you again so much for tuning in. I really appreciate it. So why do people refinance? People refinance to take cash out of their home. They refinance to lower their rate. They might refinance to shorten their term. Maybe they refinance to extend their term to increase cash flow. Maybe they are refinancing their rate for a lower rate. Maybe they're refinancing their rate because they need to get another borrower off the loan. So there's a lot of reasons that someone might want to refinance their home. And when it comes to refinance, what's the next big R word that comes hand in hand with that? If you think refinance, you think rate. Refinance, rate, right? So rates are the hard part. Refinancing, it's kind of like, oh, refinance, no big deal, whatever, I'll look into it. But rates, that's the hard part. Did you know that rates are so finicky? Did you know that the mortgage rates change every day and sometimes multiple times a day? Oh my gosh, welcome to my stressful world. Yes, you might be trying to get a rate and then 2 minutes later it's different. And so they're changing constantly. So they're finicky in that way, right? Another thing is a lot of people don't really get what they think or know what they're really getting. And so that's some stuff that I want to go into today as well. And there's just so many things that you want to consider as well. So I'm going to kind of dive into that. So rates are case by case, and so case by case. Like, you're going to be mind blown when I tell you all the things that go into the rates. If I have a rate sheet for today, that rate might be anywhere from 2.2 to 6% that day, and anywhere in between. Hey, Rosie. Hey, Olivia. Thank y'all for tuning in. So those rates might be anywhere in that whole range, right? And then where do you fall on the scale? And how do you know where you fall on the scale? What difference do those different factors make? So there are a lot of those. When you are looking at mortgage rates, what goes into pricing a rate is credit score, loan type, loan term, loan to value, loan purpose, loan amount, how long you're locking for, occupancy, and is it a single family? Is it a condo? Is it a 1 unit, 2 unit, 3 unit, 4 unit? That I forgot to keep counting, but that was 7 or 8 different factors that go into a rate. So my rate is not going to be the same as my neighbors, and it might not be the same as my cousins, right? Because it's so case by case for all of us. And there are so many things that go into that. So how do you protect yourself as a consumer and figure out what rate do you really qualify for? How do you know what to do with that? So I'm going to give you some tips. Before I was a lender, I thought that I was so smart when I was going to finance mortgages one time. And I was like, I'm just going to call everybody and I'm going to get their rate and I'm going to write it down and then I'm going to go back to whoever was cheaper. Well, you'd be better off reading a book if that's what you're going to do, because it's a waste of time if you're not doing it the right way. So if you call and say, hey, what's your mortgage rate, right? Remember, I told you we've got that sheet and there's those huge flexibilities in there, right? So you're going to get quoted based on standard assumptions unless you ask and tell otherwise. So what in the world am I talking about, right? So when you look online at mortgage rates, what is today's rate? There are going to be rates that you're going to see, and there will be assumptions that go along with that rate. Now, the assumptions are not always easy to find, okay? You might spend 5 minutes trying to find those assumptions hidden there in the little fine print on the left-hand side or wherever it might be, right? With those assumptions are typically the rate that you see will be based on a purchase, not a refinance, and certainly not a cash out refinance. It's going to be based on a primary residence, not a secondary, not an investment property. It's going to be based on a single family, if I didn't say that already, a single family unit, not 2 unit, not 3 unit, not 4 unit, and it's not going to be for a condo either. It's probably quoting a loan amount between $250 and $510. It's probably quoting you a conventional loan based on a credit score of 740 or above. And you're probably also being quoted based on a 30-day interest rate lock, buying a point, not getting the rate without points, and putting 30% down. Yeah, that's a mouthful, right? That's such a mouthful. So the second that you don't meet all of those things, that is no longer your interest rate. That is freaking confusing. That is insanely confusing, right? So how do you narrow it down? How do you really figure out what is your interest rate going to be? Well, first of all, you've got to have knowledge, because we all know that knowledge is power. You have to know what to provide, even if you're not asked the question. So this is what that might look like. Rather than saying, Joe Blow, what is your interest rate? You might say something like, I'm looking to buy a house. I have a 720 credit score. I'm going to put down 5%. I'm thinking a conventional loan is best for me, but I'm open to your suggestions. This is going to be my primary home. I'm looking for a 30-year term. That way, the loan officer can really quote you for your situation, not give you a quote to find out later that that's actually not what you qualify for, and you're going to be disappointed. So let's just skip that whole disappointing part. So does that kind of make sense with regard to rates? Does anybody, I want to know you guys are there and out there and, engage with me. If you don't mind, maybe drop me a comment. Does that help? Is that surprising? Does it make sense? Are you like, oh my gosh, no wonder, you don't get that crazy rate that's posted there as like a teaser rate. A lot of times with advertisements, they'll post teaser rates to get you to call, and that might not be what you are actually going to qualify for. So what do you guys think? Is that making some sense? Hopefully. Sai says yes, it makes sense. So thank you for engaging with me. Yes. Okay. So a little bit further on the rates, and then we're going to go into some other portions of refinances and things to consider and what you really, really need to know. Thanks, Steph. Thank you for telling me a good explanation. I'm glad this is making sense. Now, as I mentioned in the beginning, so many of you guys heard the Fed lowers the Fed funds rate to 0%. And how many of you, put your hands up in the comments, don't be embarrassed, how many of you called your mortgage loan officer and said, hey, I want to get that 0%. I want to sign up for that rate? Well, so many things go into mortgage rates, and the Fed's fund rate is completely separate and different than a mortgage rate. The Fed's fund rate is what the banks charge each other to borrow money from each other. Nothing to do with the mortgage rate. It's literally apples in comparisons to oranges, not even like green apples versus red. We're talking like apples, oranges, non-related. So can that obviously be so confusing? You're like, wait, what are you talking about? They just said the rate was 0%. So what goes into mortgage rates is a number of factors, right? It has to do with the economy. It has to do with the job market. It has to do with the treasury bills. It has to do with the stock market. Like there's little pieces of everything that kind of goes into this to some extent. And even beyond that, volume actually goes into that. And what do I mean by that? Well, COVID has caused the mortgage industry to have a big backlog. And in the beginning, we're starting to see some things look a little better now. But in the beginning of COVID, let's say if you were a mortgage company and you were prepared and used to doing 1,000 loans a month. Fine, you got it, right? That's what you're staffed for. That's what your warehouse lines are prepared for. That's what you can do. You're used to 1,000 loans a month. Well, what happens when overnight you now have 2,000 or 3,000 loans? You can't do them. You don't have the warehouse line. You don't have the staff. You don't have the capacity. So what then happens is even if all these market conditions are beautiful to give us this insanely low interest rate, when you have companies that can't handle the volume, well, they have to uptick their rates to slow down the volume. So that's another thing that goes into where current mortgage rates are. So you have to kind of take that into consideration as well. And flipping that around, hey, Bo, hey, Kimberly, flipping that around, let's say if you're a mortgage company and your volume was really low, and so you really needed to increase that volume because you're staffed for 1,000 loans a month. Well, then you might lower your rates so that you can then increase the volume and level yourself out, build your pipeline. So those are all these different things and factors that go into the rates in general. Then we talked about what goes into rates case by case, what you need to know, what you need to ask, why it's so confusing, right? So does that make sense? Can I get a yes? Can I get a maybe? Can I get a no? No? Yes? Might be delayed. But anyway, so I'm going to go into the next portion of the discussion. Okay, I got some thumbs ups. I got some yes. Okay, maybe I have slow internet. I don't know. Maybe the internet thinks it's Friday afternoon and it's kind of chilling out a little bit. But hey, Sherry. Okay, so what I want you to consider when you're refinancing. Now you know what goes into mortgage rates in general. Now you know what goes into your mortgage rate, right? Now let's talk about what to consider when you're thinking about refinancing. I'm even going to give you an actual case study. I'm going to run through those numbers to kind of simplify it for you. Hey, Tim, to kind of simplify that for you. And then go through a couple other things with you. And then I'm going to finish up with some Q&A and answer any questions that you guys have. And I have some questions that people have already emailed me that I'm going to go through as well. So we know why rates are confusing. We know what goes into rates in general. We know what goes into rates for you specifically. But how do you know if you should refinance? How many of you have heard all those incorrect myths, shall I say, about refinancing? Number one, that I hear so much. Don't refinance unless you're dropping your rate at least 1%. If I had a record scratching machine, I would like scratch the record right now and say, nope, not right. There are instances where you might save 3% on your rate and it does not make sense for you to refinance. And there are instances where you might save 0.5% or 0.25% on your rate and it makes sense to refinance. So that's a generality that is wrong. You need to go case by case, and I'm going to tell you what to consider. Another example. How many of you have heard that you should always take your 30-year and flip it to a 15? The answer to that is yes, sometimes, right? So we've all heard these myths or these generalities. And when I'm dealing with people's money and their mortgage financing, I don't want to do anything general. You work too hard for your money, and we need to figure out what you're doing, why, does it make sense? Make sure you're not overpaying and make sure you're getting what you need and what works for you. And that is so case by case, insanely case by case. So what to consider when refinancing? You want to look at your cost in relation to your break even. So I'm going to give you an exact example. We're going to kind of come full circle here. So this is from a client this week. Their cost to refinance was going to be $3,780. Their savings, $349 a month. Amazing savings, right? So I would take their $3,780 cost divided by their $349 to figure out that they would have a break-even point of 10.83 months. Now, let's stop for a second and then come back again. But so for them, number one, the cost. Your prepaids are not a cost. You are going to pay your taxes and insurances, whether you have your current mortgage, whether you get a new mortgage, or whether you pay off your mortgage. You have taxes and insurances. You don't get a free day. You don't get a free month. So when you are considering a refinance, that is not something that you should take into consideration of the cost of the refinance. The second thing I wanted to say was that savings, $349 a month. I mean, I don't know about you, but to me, that is an insane amount of money, like a lot, right? And guess what? That was less than a 1% drop in their interest rate. Yes, mic drop. Less than a 1% drop in their interest rate was going to save this scenario $349 a month. And if they had listened to those generalities of if you're not dropping 1%, then don't refinance, they would have lost $38,041 based on the time frame they're staying in the house. And if they were staying for 30 years, it would have been way more than that. So just to kind of put that myth to rest. The next thing is $349 a month, a 10.83 month break even. So here's the next crucial question that if your loan officer doesn't ask you, you better tell them because you want to make sure you're not wasting your money. If this client told me that they were going to be selling or relocating in 12 months, I don't care that it's $349 a month. Their break even is 10.83 months. They're selling in 12. I would not refinance. That's not what I would suggest to do, right? And that's like somebody might say, "Oh, you're saving $350 a month and you don't refinance. You're dumb." Okay, well, in this case, if they were going to sell in 12 months, then it would be better to not refinance than to refinance. But that was not their situation. They actually told me that they were going to stay in their house for another 10 years. So let's do the math. 10 years is 120 payments. 120 minus 10.83, keep it simple, that's 109 months of savings at $349 a month. That is $38,041. So to sum it up, they could spend $3,780 today to 10 times their money to $38,000 in 10 years. If those were the odds of the casinos would go out of business because that's a dang good return on your investment. So, point of all that, coming back to what to consider when refinancing and if you should or if you shouldn't. You want to consider your cost versus savings. You want to consider, yes, I'll take those odds all day too. You want to consider your cost versus break even. You want to consider your cost versus savings, your break even, your long-term savings, your short-term savings, how long you plan to be in the home. Take that into consideration. And then remember your closing costs versus your prepaids and not muddying those waters when you're trying to figure out those calculations. Does that make sense? Does that help kind of like lift the veil on how do you really know if you should refinance or not and kind of make that more simple? I'm really hoping so because that's my goal here is to educate as many people as I can. Good. Thank you guys. Okay. So the next point that I want to cover, and I'm not going to be a whole lot longer. Remember, I promised you 45 minutes or less. The next thing that I'm going to cover is what most people do wrong or can do wrong when trying to get a mortgage or refinance is they might accidentally ask for the wrong loan. Of course, I have to explain that. So my point is be educated, ask for what you want, ask for what you think you know, but tell the loan officer, look, I'm open to your suggestions. Here are my goals. What I mean by that is if you were to call and say, I want a cash out refinance, what if you were told no because you didn't meet the requirements? Or what if you were told yes, you didn't even know it, you paid a higher rate than you could have gotten if you actually did a renovation loan instead of a refinance because you were looking to take the cash out to improve the home. So if you might have said something like, hey, I think I need a cash out refinance. I want to renovate my property. Here's my credit score. Here's what the house is worth. Here's the term I'm interested in, all those kind of things. I think I need a cash out refi, but Mr. Loan Officer, I am available and open to suggestions if you want to discuss other things with me. And by doing that, you're giving a lot of information. You're saying what you want. You're saying what you think you know, which you should as an empowered consumer, but also be open and say that you're open to some of those suggestions and other calculations as well. So that is my important tip on that. Okay, it's kind of a mouthful, but so we talked about my new course being launched that I'm so excited about. In case you're just tuning in, there is a link in the comments to my mortgage piece ebook completely for free, just as to show my excitement for launching the course that's coming out. More details, TBD. We've gone through rates in general. We've gone through rates and more case specific. We've gone through why quoting rates is confusing. We've gone through what to consider when refinancing. We've gone through reasons people might refinance. And we've actually also gone through a case sample. So I'm hoping that y'all are still with me. I'm hoping that this is informative, that you're enjoying it. I've actually got some questions that were sent to me by people prior that I'm going to go ahead and read real quick and answer. And I'm going to open up the comments section to any questions that any of you might have on rates, refinancing, mortgage loans in general. I'm opening up. I've allocated that time to be available for you and answer any questions you might have. So while I go through these, please feel free. Go ahead and drop me some questions in the comments, and I'll try to make sure I get to everybody. Okay. Question number 1 came from a consumer, and it says, when is the best time to refinance a home loan? I say this kind of till I'm blue in the face, but it's so case by case. What I mean by that is that there's not like a specific month or time of year that like, oh gosh, always do it in March because of this, or always do it in December because of that. The time is really case specific because it really depends on what we talked about earlier, the rates, the purpose of your loan, the cost versus the break even, your savings, your long-term plan, your short-term plan, all of those things go into consideration. And that's really going to tell you when the right time for you specifically is to refinance, because there's no just magic pill of, hey, this is when you refinance. That just doesn't exist. Let's see what our next question is. Okay, interesting. So what actually happens when someone refinances their mortgage? And I get this a lot. If someone calls and says, I want to refinance, and they say, I want a $60,000 mortgage, I have a $50,000 mortgage currently, so on and so forth. And a lot of times they'll say, so what happens to my current mortgage? Well, what happens when you refinance the mortgage that you have is that a new mortgage comes into place, replacing the existing mortgage and that mortgage lien, and it's going to be a new mortgage. So that old mortgage is released, the old lien is released. So in this example, if you owed $55,000, you're getting a new loan for $60,000, you're going to end up with one new loan at $60,000. You won't end up in this case at a $55,000 loan and then a $60,000 loan. It's just the one new loan, new refinance. So that's kind of what actually happens when you refinance your mortgage. Let's see what else. Okay, another good question. How long does it take to refinance? Most of all, what dictates a timeline in a mortgage is the customer. And I'm going to tell you what I mean by that. Of course, right? That's what I do. I tell you what I mean. But the customer is what really matters, because if I say I need 4 check stubs, I need a bank statement, I need a mortgage statement, and I need a driver's license, and you get me that, we're off and running. We got it. We're moving. Okay. But the second that you send me a driver's license that's black, it's all blacked out, can't see it, the fax came through bad. You sent me 2 paycheck stubs, not 4. You sent me your bank statement, but you're missing 2 pages of it. And your mortgage statement, it's June, and you sent me a mortgage statement from January. Well, guess what? So now I look at that. Now I figure out it's wrong. Now I tell you what's wrong. Now you go get the right papers. Now you send me the right papers, and we do the dance all over again. So the biggest piece in how long it takes to finance a mortgage is the customer. Give your loan officer exactly what they're asking for. If you pick up the piece of paper and you think, do they? Assume yes. Just give it all to them. We can always shred something that's not needed. Better to provide more than not enough and have to play that back and forth game again. So in the industry, and there are different times where this can fluctuate, but generally speaking, it's about 3 to 6 weeks to close a mortgage. I mean, sometimes you've got them done in 2 weeks. Sometimes they're 8 because you took too long for your paperwork. Maybe there was a title issue, but generally speaking, 3 to 6 weeks is a decent expectation of closing a mortgage. Okay, let's see. I've got 2 more questions left, and then I have time for questions from the comments. I haven't seen any come in yet, but I am available if you need that. So let's see what else we have. Okay, this one's hard. What are the best reasons to refinance a mortgage? Well, there are a lot of reasons. There may not be a certain one that's just particularly best, because it is, again, case by case. But in an absolutely perfect world, you would refinance your mortgage to shorten your term, to get a better interest rate, and to save a ton of interest while paying your mortgage off early. I am probably the only loan officer, maybe, I'm assuming, I can't judge, but I'm probably the only loan officer that gets ecstatic when people pay off their mortgages. I just feel elated with you when that happens. So paying it off quicker, saving money, saving interest, that's tremendous. And let's see what else. Hey, Samuel, thank you for joining me. All right. What are the true costs of refinancing a mortgage? So you have closing costs, prepaid items, and any points that you buy. Those are the three things that go into it. Now remember, from earlier, we talked about prepaids are prepaids. You're paying them no matter what. So yes, it goes into consideration, but not when you're looking at your cost versus your break even. So we're going to narrow it down to closing cost and points. Closing cost is the lender, the appraiser, the title company, the clerk of court. Those are generally, sometimes you'll have a termite certificate and little other things, but for the most part, those are the things that are an actual cost in refinancing your home. Then you have points. That's if you pay points. If you have points, that would be another cost that would be taken into consideration. So that's really the true cost of refinancing your home. Hey, Kimberly, thanks for joining. Hey, Andy, good to see you. So that's really the true cost of refinancing your home or refinancing your mortgage. Anybody else have any questions for me in the comments? Those are my Q&A. I've gotten through the ones that were previously provided. Now I have a couple minutes allocated. If you guys want to ask any questions, I am here to help, because that's basically the majority of everything I have for you guys today. Let me check all my notes, make sure I'm not forgetting something. I probably am, of course, but so we talked about the course. We talked about who the course is for. We talked about refinancing. We talked about what to consider when refinancing. We talked about what goes into rates in general. We talked about what goes into specific rate quotes. We've done Q&A, and then we had a case study actually looking at numbers and considering like cost versus break even and things like that. So we've kind of covered all of that today. So I am 36 minutes in. My goal was 45 minutes or less. So I think I've accomplished that. I haven't seen any new questions come in, so I'll maybe give it another minute or two. Other than that, that's my spiel for today. I truly, truly hope that this has helped you in some way, answered some question, offered you some type of clarification, so that I can help spread mortgage peace, which is my ultimate goal. Oh, I have a question. Okay. Sai says, what should you look for when working with a mortgage company to work on your refinance? The answer to this, my answer to this, is probably different than what a lot of people are going to expect. I really think that life is short, right? And so ultimately, you really have to do what you're most comfortable with. And when you're doing a mortgage transaction, it's like you're going through a 60-day, 45-day therapy session, okay? Therapy session. It is invasive, and you have to trust each other, and you have to be able to very clearly, very comfortably communicate. So when you're choosing a mortgage company, yes, you want to look at rates and fees. That's a given. But you also want to look at, where do you feel comfortable? Who makes you feel the most comfortable when you're talking to them? Who gives you the clearest answers without beating around the bush? Who seems to be very honest and caring about the service that they're going to give you? And that's what I think that you should look for when choosing a mortgage company. So that is the answer to Sai's question. Let's see. I've also gone ahead and I've got more examples of costs associated with refinancing. I posted another video in the comments as well, if you guys want to check that out. You're welcome, Sai. Thank you for that question. I really like that question a lot. Thank you guys so much for joining. I think that's a wrap for today on this beautiful Friday afternoon. I hope this is helpful. If you need anything, I have a website, stephanieweeks.com. I've got my YouTube channel, of course, as well. And as far as for a loan officer, I'm at 985-300-LOAN. That's my number. And for loan officer as well, I'm at weeksteam.com. So thank you guys. Check out the link to the free book. Keep your eyes peeled for the course. I'm so excited about it. And I hope you have an absolute fabulous weekend. Thank you so much for tuning in.